Hello everyone, my name is Financial Charles and today is August 20th of 2023. Bitcoin is currently just above $26,000, so perhaps we're in a new range where we can accumulate down here. Hopefully that's the case, or better yet, hopefully it goes down even more so we can accumulate more sats for our dollar. So today I woke up and I saw this video by Bitcoin University. This is Matthew Crowder. He's probably the number one Bitcoin YouTuber out there, and he's probably one of the only ones that you should be watching. I was part of this space here I joined really in 2020, and throughout that whole bull run that followed it, I was watching all types of YouTubers. I was watching, Benjamin Cowen, I still watch. He's definitely a crypto YouTuber, though, not a Bitcoin YouTuber. I was also watching the likes of Crypto Capital Venture. That's the guy that was really bullish on Cardano throughout the whole bull run. I was watching people like Data Dash, Crypto Zombie, and all them. And you have to be careful about these crypto YouTubers because these people are simply going to just promote projects that they are paid to promote. These devs, the developers behind a random crypto, they go up to these YouTubers and they offer them a holding, or they offer them a large check to talk positively about their crypto. But really, over time, what I've learned is that all crypto is a scam except for Bitcoin. Bitcoin is the only legitimate one out there. And even Ethereum, I made a lot of money on Ethereum last bull run, but the whole time, this guy Bitcoin University, he's been bearish on Ethereum because it is fundamentally unsound. He says that it is exactly like fiat and it's built on a foundation of sand. So, which means it's really easy to, for it to crumble down eventually. And it's very true. I mean, he made a video yesterday or a couple days ago, I don't know, where Vitalik Buterin, the creator of Ethereum, and if you don't know, most of these cryptocurrencies, they're built on top of Ethereum. And basically, Vitalik was talking about how there's always a back door with all of these protocols, to where if there's an error, the devs can step right in and alter it in any way they need to, and that's a problem because now you have human beings in control of the protocol, whereas with Bitcoin, it's like human can shut it down. No human can, go against it. You can try to fork it and make a Bitcoin Cash and a Bitcoin Satoshi vision, but it's not the original Bitcoin. And I hear so many people, they talk about, oh yeah, well, Bitcoin sure it's only 21 million, but that's until they decide to increase the supply. And that's not how it works. Bitcoin, according to the code, is capped at 21 million. And you cannot change the code. The code has already been established. And if you change the code, all you're doing is you're creating another Bitcoin fork. And that is what Bitcoin Cash is. When Bitcoin Cash was invented, they wanted it to be truly peer-to-peer, fast transactions, fast confirmations, low fees, all that stuff, right? What a medium of exchange should be. So how come Bitcoin Cash is just going down and down and down, and no one cares about Bitcoin Cash anymore, even though it's technically better than Bitcoin in terms of peer-to-peer medium of exchange? It's because it's not the first cryptocurrency. Bitcoin is the first perfect hard money, and you can never replicate that. And if it's not broke, there's no reason to fix it. I mean, I know Lightning Network, me personally, I've had various problems with Bitcoin Lightning Network, but it's because it's in its infancy. I mean, all these developers, they're going to eventually fix the problems with Lightning Network over time. But in terms of, Bitcoin, it's the one and only digital scarcity there is. You can never recreate digital scarcity ever again. And that's what these people try to do with Bitcoin Cash. That's what they try to do with Litecoin. Litecoin was created as a Bitcoin Lite. It was meant to, again, like Bitcoin Cash, faster transactions, cheaper fees, and all that stuff. And there's also, Litecoin is capped at 84 million. But the reason that we don't go toward it is because Bitcoin is the one with the strongest network effect. It was there first. and it's not broken. It's perfect, and it functions exactly the way it's supposed to function. So, and no one has hacked it. No one has shut it down. It is the longest standing cryptocurrency. It is so far holding up against the test of time. And with each day that passes, Bitcoin, the test of time, it becomes more and more, solidified in history. With each day that passes, Bitcoin becomes more secure. And, if you were to try to create Bitcoin 2 right now, how are you going to convince all these Bitcoin miners to switch over to mine some Bitcoin 2? There's absolutely no reason. There's no incentive. And another argument that I've heard about Bitcoin is, oh, doesn't it isn't this like bad for the distribution of wealth? Like, don't you think that the people on top are going to be so much more powerful? And the reason that doesn't matter is because Bitcoin, no matter if you have 1 Bitcoin or 0.0001 Bitcoin, or if you have 10,000 Bitcoins, it doesn't matter. The Bitcoin is a vehicle to store your present value so you can take it into the future. You can't do that with anything else. If you keep that in fiat, the Federal Reserve prints away your value. Gold has a half-life of 30 years, meaning that if you were to buy gold, and gold, that was the store of value for the past 6,000 years of humanity. Humanity has used gold for the past 6,000 years to store their wealth, and it's been the best store of value for so long until Bitcoin was invented in 2009 or 10. This is the first time in history that we're actually getting an actual asset that is, you cannot inflate it. With gold, you can inflate it 1.5% per year. And, if you read the Bitcoin standard, the more that gold goes up in value, the more gold that the miners will mine, because now that gold is worth more, they have more incentive to upgrade their infrastructure and mine more gold. With Bitcoin, you cannot do that. There's a limit to how much Bitcoin you can mine, and with every 4 years, there's a halving, which means that the amount of Bitcoin that is rewarded per block mine gets cut in half. It doesn't matter how much computers you use, doesn't matter how much money that you pour into your infrastructure, you cannot mine more Bitcoin than what the protocol allows you to mine. You can only mine a block every 10 minutes, and each block reward right now is 6.25 Bitcoin. With the upcoming halving coming in April 2024, that gets cut in half. The block reward gets cut in half to 3.125 Bitcoin per block mined, and it will always take 10 minutes to mine. Doesn't matter how many computers you have, it's not going to speed up the process, and now you can mine Bitcoin in 9 minutes or 8 minutes or 7 minutes. It will always be 10 minutes, and you cannot earn more than, assuming this is past the April 2024 halving, you cannot earn more than 3.125 Bitcoin, because there's a difficulty adjustment. If there's more miners in the network, it makes it more difficult for everyone to mine that block, and that's to control the supply of Bitcoin. And when miners quit because it's unprofitable, now the difficulty adjustment, it gets readjusted to make it easier to mine. But either way, the protocol is set so no matter how many miners join or leave the system, you can only mine a block every 10 minutes, and you can only earn the block reward that is established. So right now, 6.25 Bitcoin per block. Next halving, it's only going to be 3.125 Bitcoins per block mined. So this, Bitcoin, obviously, it's in terms of, the supply and everything, this is the most sound store of value ever. And this is not even what I wanted to talk about, but it's such an important thing to realize. What I was originally going to make this video about was Matthew Crowder. He put up a video just today talking about to put 100% into Bitcoin. And this is something that I've thought about ever since 2020. And as the years go on, I love to see how more and more people are starting to realize this. Even this YouTuber here, Luke Broyles, big inspiration. He's like the same age as me, and he's done so much for the community, and the fruits of his labor. He's enjoying the fruits of his labor already, and I want to be a part of this community. I want to be a Luke Broyles. I want to be the reason that someone understands Bitcoin, and because this is, I think that if you really truly understand Bitcoin, that is the life-changing moment right there. If you watch a Michael Saylor interview, He talks about how Bitcoin is the most thermodynamically sound entity to ever exist, because this is a complete evolution in energy conservation, right? Like, in terms of energy conservation, if you store your wealth in a fiat dollar, you're storing your wealth in a melting ice cube. That's all you're doing. It'll bleed over time. And even gold, like I said earlier, gold has a half-life of 30 years, which means that if you buy gold today and you wait 30 years, that gold can only buy half of what it bought today in 30. So it slowly loses value over time, but gold, it's better than fiat, which is why people, saw gold as the best store of value before Bitcoin was invented. But now that Bitcoin is here, it's a no-brainer. And to put 100% into Bitcoin, some say that is so risky, but when you finally understand it, you realize that putting 100% into Bitcoin is the number one safest play. It is the least riskiest play. Like, if you diversify into the S&P 500, and if you diversify into real estate or precious metals, you're taking on more risk. The risk-free strategy is to go 100% into Bitcoin, because it is Bitcoin that is going to devalue everything else. It'll demonetize everything else. Every other asset class will bleed against Bitcoin, and that's including real estate. And real estate's a tough one, because I've had so many people in my life, and I've watched so many YouTubers talk about the joys of real estate and cash flow and leveraging your money. And I will admit, like, there's a lot of good things about real estate that Bitcoin does not do, such as cash flow. You cannot earn a yield on Bitcoin, as we learned in the previous cycle. We thought we could earn yield on Bitcoin in the previous cycle, but then all the yield applications, such as BlockFi, Celsius, and Voyager and all that, they all went bankrupt, and they all ran with our money. So you cannot earn yield on Bitcoin, but you can store present economic energy today to take it into tomorrow, take it into 10 years from now, take it into 1,000 years from now. In real estate, not only, you can cash flow it, and you can leverage your money too, which is great. You could, put $20,000 down to control a property that is 200,000. You know what I mean? Like, that's the type of leverage that they're talking about, which is great. And if you can secure a low interest loan, then that's great. Then that's an asset. And I think a low interest US dollar loan is actually an asset, assuming that you use that loan to buy Bitcoin, or, period, to buy Bitcoin. No other asset. That is an asset. US dollar debt, especially low interest, is an asset. But you're not going to get a low interest loan in today's market, because the Feds keep rising the interest rate to tighten up the system. It's quantitative tightening. They want to remove dollars out of circulation, so that way they can keep inflation under control. But right now, if you were to take out a loan, that's an 8%. That's 8%, which is, that's a lot. Not even the S&P 500 can outpace that. The only thing that's going to outpace it is Bitcoin. So the reason I bring up real estate is because Matthew Crowder, right, he sold off his rental properties. He used to own rental properties, right? So it's not like this guy's just talking with no real estate experience. He actually owned rental properties and would rent it out. And he sold his rental properties in 2020 and put it all into Bitcoin. And he says that he does not regret it. Now, the many problems that he has with real estate is that, one, real estate is never truly yours. You never truly own it, even if it, you buy it up in full and you don't pay any mortgage. The point is, if you still have to pay property tax at the end of the day, and if you do not pay the property tax, the feds, the federal, the higher ups, they will seize the IRS. They will seize your property. They will take it from you. It doesn't matter if you own it, doesn't matter if you bought it. They will seize it from you because you did not pay the property tax. So you are always subject to, be a slave to the IRS, essentially. So not only that, but He also talks about expensive repairs. It talks about problem tenants. Now, I know that, with tenants, you could just do a really thorough screen and make sure that you're getting the best quality tenant out there. But even then, you will have to fix the bathrooms. Well, not you getting on your knees to screw all the screws in there, but like you would have to hire someone out to fix the plumbing, to fix the roof, and it's a very high cost. The maintenance is very high cost, and it's just so much work compared to Bitcoin. With Bitcoin, you buy it, you transfer it to your cold storage wallet, and you simply wait. You don't do anything with it. You don't have to call up any contractors to fix anything. You don't have to check on the tenants to see if they're doing well or not. With Bitcoin, you just buy it and you just hold it. So that's what Matthew Crowder is saying. 100% into Bitcoin. And when I see things like that, that makes me feel so much better, because I've been 90% Bitcoin this whole entire time. And that's because I know for a fact that the S&P 500 is not going to outpace Bitcoin, because it is Bitcoin that is devaluing everything else. All asset classes, once again, they bleed in correlation to Bitcoin. Now let me show. Oh, hold on. That's an ad. I can show you right here. The BTC. I don't think this is the right one. This is BTC money supply, BTC gold, BTC SPX. So this chart right here, this is the value of Bitcoin in relation to the S&P 500. And let me just zoom all the way out. As you can see, it is exactly like the Bitcoin US dollar chart. Bitcoin goes up against the S&P 500 over time, and you cannot refute that. According to the data, Bitcoin goes up against the S&P over time. And let me show you the S&P 500 in comparison to the US money supply. This is a video that Benjamin Cowen made yesterday, and I didn't make a video yesterday. I was going to make the video on this about how the S&P 500 is not really reaching all-time highs. It's actually facing resistance when you take in consideration the amount of dollars in circulation. As you can see right here, this is exactly the chart that we're talking about right here. Let me just zoom out more. This was 2020, right before the pandemic crash. This was the December of 2021 high right here. And now we're coming back up to that resistance point once again. And we're headed down once again. I don't know if it's going to retest this resistance point right here, but yeah, as you can see here, we're clearly facing resistance. So even though, let me switch over to the SPX, even though according to everything else, you might think that the S&P is at an all-time high, and it's at an all-time high in terms of US dollars, but the fact of the matter is, these US dollars that we're using, that we're, measuring the value of it from, there's more dollars in circulation, each dollar is worth less over time. This is the real chart. We're not really reaching any new valuations at all. And in fact, if you compare the all-time chart, you could see here the dot-com bubble of the 90s and 2000s, or late 90s. We're not even near those valuations at all. And if you go all the way back here, you can see that this resistance that we're in, it's the same resistance as we were at in 1961. So really, the S&P 500 is stuck in a channel, and it's been stuck in a channel throughout our whole entire lives. And the only time it broke out of it was up here for the dot-com bubble. And this down here, this was when this is when they started unlimitedly printing dollars. Around this time, this is where the president at the time, he completely halted conversions of US dollar to gold. You were no longer allowed to redeem your US dollars for gold. The US dollar was no longer backed by gold, and because of this, the Federal Reserve, they were able to print as many dollars as they can, and this describes this period right here. So it's these types of charts that really open your eyes to see what's going on. And even in Ben's video yesterday, he's like, the S&P, you might think it's going up over time, but in reality, it's going up not because it's fundamentally stronger than ever before. It's not because, these companies are bringing in so much profits and they're fundamentally improving and everything. They're rising because the currency in which they are measured is inflating at such a rate where, of course, everything is going to go up over time. So let me go back to the S&P 500 chart. He's like, yeah, sure, it's going up in value, but imagine how much everything has gone up in value in terms of CPI. All of our food, it's doubled. The gas has doubled. The rents, the rents and the mortgage, they've gone up like crazy. So sure, the S&P has gone up, but in relation to everything else in everyday life, all consumer goods and all this and that, they increased as well, which completely that's exactly what this chart illustrates right here. It's the exact same. It's the same as what it was. We're not in a better position. We're in the exact same position. But the reason that we think that we're in a better position is because it's the US dollar valuation says it's more valuable, but in reality it's not, because each US dollar is less valuable with the more money they print. So let me just hide these drawings real quick. But even real estate will eventually bleed to Bitcoin, because Bitcoin is the asset that will back everything. When they talk about the US dollar was backed by gold, that meant that there was gold reserves to back each US dollar's value. You know what I mean? So with each $1 bill that you had, you could redeem that for gold. Gold was backing the currencies. In the future, it is Bitcoin. Bitcoin is going to be the underlying asset that backs all other asset classes, if that makes any sense. So real estate will be backed by Bitcoin. All the stocks, they'll be backed by Bitcoin. Everything is going to be backed by Bitcoin. They say, what is Bitcoin backed by? Bitcoin is the one that backs. But what is it backed by? It's backed by proof of work. It's backed by its energy uses, and it's backed by math. It's backed by math and engineering. You cannot argue the math. So, yeah, I think that's all I wanted to talk about for today. I really wanted to talk about, putting 100% of Bitcoin putting 100% of your net worth into Bitcoin, as opposed to, diversifying into real estate. And I did kind of go a little bit off topic, and actually, let me even one more thing with Michael Saylor. Michael Saylor, he says diversification is selling the winner to buy the loser, which means if you're not 100% Bitcoin, and instead you are selling off some Bitcoins so that way you can diversify into S&P 500 and real estate, what you're doing is, yes, you're selling the winner to buy the loser, because all of these asset classes are going to not go up as fast as Bitcoin. If you were to, take a chart exactly like this, like the 10th time I'm showing you today, S&P 500 compared to Bitcoin over time, where's the chart? S&P 500 compared to Bitcoin over time. Here we go. The more that this chart goes up, that means that the value of the S&P 500 is bleeding against Bitcoin. This right here, this is gold bleeding against Bitcoin over time. So everything is bleeding against Bitcoin, and it'll continue to be this way until, Bitcoin will eventually reach $10 trillion market cap, which means $500,000 Bitcoin, and it doesn't stop there. It will never stop there. There's going to be more money to be printed, and all of those dollars will eventually, they say that if you were to evenly distribute all money across all 8 billion people in the world, like if all 8 billion people had the same amount of money, within a month, all of that money is going to find its way back into the top 1%. It's because the top 1% acts differently. Like they treat money differently. Like, so if all of us, we all equally had the same amount of money, it is the lower class and the lower middle class that will mindlessly spend their money and they will give it to the upper class, or the upper middle class too. You know what I mean? Like, these classes, they're that way because of how they treat money. So it doesn't matter about, unequal distribution of wealth. None of that matters, And, I don't know if I already said this in the beginning of the video, but I heard an argument saying, like, doesn't Bitcoin increase the unequal distribution of wealth? But that doesn't matter how the wealth is distributed, because Bitcoin will move the same way for the top 1% and the bottom 99%. Doesn't matter, because Bitcoin is Bitcoin for everyone. Doesn't matter if you hold 0.0001 Bitcoin or 10 Bitcoins. The price of Bitcoin is going to move the same way and is going to appreciate the same way. It doesn't matter if you hold $1 or $10. The point of Bitcoin is you take your money, you take your economic energy from today, and you store it for the future. Doesn't matter how much money you have. No matter what money you have, it will be able to be stored and taken into the future at its fair valuation. If the top dogs, right, they have so much money because Bitcoin is going up in value. If they want to benefit from that, they will have to sell their Bitcoin. But once you sell your Bitcoin, there are strong hands out there that will buy it up immediately. So you can try to sell your Bitcoin, but the danger is you might not be able to get it back for that price. SpaceX, they just sold $370 million, and really, it is the strong hands that were buying up their Bitcoin now. So if they want that $370 million of Bitcoin back, they'll have to buy it at a premium, and at the end, they're going to end up with less Bitcoin than what they originally had. All right, well, that's the end of the video today. Hope you guys liked it. Please like and subscribe, and I will see you again tomorrow.